And when Kamala leads, it actually provided some certainty to the stock market because likely she will implement the previous regime policy. For example, let's say she may continue on with Biden's existing policies and so on. Okay, good afternoon everyone. It's end of the month again and welcome to our monthly market updates for Busy People series, where we will help you get up to date with the global stock market while you are having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the global stock market. Since we are doing this over lunchtime, hence we'll keep it to 30 minutes. I will start the timer when we start. We'll cover the market highlights, major stock market indices performance, and also the upcoming potential opportunities and risks out there. So are you guys ready? You may type me in the chat if you are ready. All right, so let's proceed. Right, so just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor and we do not manage customers' funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decisions and be able to get better results. If you are looking for stock tip, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. All right, so with that disclaimer, let me start the timer first. All right, as usual, let's start with the market highlights. So any one of you traded the stock market over the past few weeks, and how was the market doing? You may type your opinion in the chat. So let's take a look on what happened in the stock market. SPY, the S&P 500 ETF, break above all-time high after the Fed rate cut, and we do see that. Why the S&P 500 suddenly turned bullish? This is because after the Fed rate cut, we also see that there are better unemployment claims over the past week. And the Fed rate cut of 50 basis points show that the Fed are committed not to fall behind the economic reality. So we can see that Fed commit to take action if there is some unhealthy economic situations where Fed are in time to are ready to cut the interest rate or to support the economy if let's say there is some unemployment data going up in the future. This shows some commitment from the Fed with the first 50 basis point cut. However, during the press conference, Jerome Powell, the Fed chairman, do mention that do not expect this will be the going, this kind of a rate cut, this kind of pacing will be the standard going forward. This is the Fed do the first 50 basis point rate cut is just to catch up with the economy reality. All right. So this is the positive news on the market, and let's move on to see what is the another fact that support the S&P 500 to break all-time high. So after the presidential debate, I think back in 10 September, where you can see that Kamala was leading. This provided some certainty to the market as we know that Donald Trump tends to have more threats or more ad hoc opinion on his policy. For example, he wants to impose more tariff on China and other countries. This caused more uncertainty to the stock market. And when Kamala leads, it actually provided some certainty to the stock market because likely she will implement the previous regime policy. For example, let's say she may continue on with Biden's existing policies and so on. So with Kamala leading in the presidential election poll, so this provided some certainty to the stock market. However, despite the market breaking all-time high, it seems that the stock chart are going back into uptrend. There are still some uncertainties in the market itself. So let's take a look on what are the uncertainties ahead. So first of all will be the concern on the high unemployment. So the jobs data over the past few months has been the unemployment data on the high side. And also at the same time, from the latest FOMC, also the Fed do project higher unemployment going forward. So this may cause some concern about the economy. However, the market reacted positively because the Fed committed to act and not to fall behind the economy reality. We can see that from the Fed's recent action by cutting the 50 basis point of interest rate. And second uncertainty still in the market will be interest rate hike cycle in Japan. As we know, US are going for a rate cut cycle, while Japan are going for a rate hike cycle because their economy has been recovering and their inflation has been going up. However, recently, after the Fed cut 50 basis points from their latest FOMC, Bank of Japan do pause their rate hike decision. And for now, the risk of inflation overshoot in Japan actually temporarily reduced. So with this, this provided some certainty to the stock market, especially after the FOMC and also after the Bank of Japan's press conference, plus with the unemployment claims data coming in last week, show that is getting better. All right, so this temporarily provided some certainty to the stock market. And next one will be the biggest uncertainties in the market will be the US presidential election. As we know that different presidents may implement different fiscal policies and also international diplomat relation, and also may also cause some geopolitical tension and so on. So with US presidential election still ongoing, still haven't finished, I think the election will happen in November. So this may cause some uncertainty in the stock market. However, based on the stock chart, it's already at the all-time high. So looks like the market are taking this positively, and with all this uncertainty ahead, as an investor or traders, we still need to remain cautious. We still remain cautious because these uncertainties likely will persist until after the US election. And as a traders or investor, we should remain cautious and disciplined in terms of our portfolio exposure over this uncertain period. And with now market near the all-time high, I would say we need to be cautious as well to see if there is any profit taking from all these funds as well, or from the market as well. All right, so for investors or traders, we only invest in stock with good valuation, shown some good setups, and in line with the mega trends only we consider our investment and limit our portfolio to a proper risk management ratio so we don't overexpose the portfolio. And for traders, you can trade according to the trend. So currently the chart reverses into an uptrend, and we can trade the trend. We can trade in line with the trades that are in line with the trend, and also we also only take good setup, which means that we only trade strong setup according to the technical charts and according to the market catalyst and so on. So this is what investors and traders can do over the for the recent market, and what we know that with the SPY at the all-time high, potentially this bull market may continue. But with this uncertainty ahead, we also foresee that potentially market may get a bit volatile. So we need to remain cautious and disciplined in terms of our portfolio exposure, not to expose 100% of our cash into the market. All right, so we need to have a proper ratio on portfolio exposure and also properly manage our risk. And when election finish, then there may be more certainty in the market, and we may continue to see what happened in the market after the election and so on. So after going through the high-level market updates, let's take a look on the stock market performance recently. So first of all, let's take a look on the Nasdaq 100, which represent the top 100 United States tech stock. And for the 10-year return, we can see that over the 10-year period, they provided the return of 460%, and with the average per year of 46%. And we can see that recently, the Nasdaq has been breaking out above the previous high and about to test the all-time high again and back into an uptrend. So you can see that with the Fed rate cut plus the unemployment claims getting better, plus the Fed also more comfortable with the inflation, we can see that stock market recovered recently. However, like I mentioned earlier, there are still some uncertainties ahead. For example, the election and also the Japan interest rate hike and so on. So we may need to continue to monitor the US market, and we can see that now it's near the resistance level, and we may wait for a pullback in order for us to get some good trades and so on. And secondly, we'll take a look on the S&P 500, which represent the top 500 stocks, biggest market cap stock in the United States. It also represents overall US stock market. We can see that the 10-year return is around 210%, and average per year is around 21% over the past 10 years. And we also see that recently it recovered above the all-time high. Let me draw a circle here. So we can see that it recovered above the all-time high, and now is still staying above the all-time high. But we do see that recent days the momentum has been slowing down a bit. So we do want to wait for a pullback before we invest or trade, because we may want to only trade or invest when the stock charts are near the support level. All right, so this is more towards technical analysis. And also currently with the stock market already recovered, some of the stocks already shown some higher valuation. We may need to wait them to correct further or pull back to have a more fair valuation before we enter our investment and so on. But in the past, if let's say you are an investor, you prepared your stocks with strong fundamental, with great valuations, during the uncertain period, it will be a good time for you to enter your investment position. All right, after the US stock market, let's take a look on the China stock market. China stock market has been in a downtrend over the years and has been in a challenging time over the past few years. You can see that China economy has been slowing down. So how many of you are following China market news, and what are the economy issues in China? You may type in the chat to share your opinion as well. In the past, what happened in China market, and whether the property is doing well or not, whether they're having a property crisis, or whether the economy having any issues. You may type in the chat if you are following China. All right, so to us, we do see that Yeah, China index shoot up today on a recovery, but in the past there has been in these property issues, has been a lot of overhang and in an property crisis in the past, and also at the same time now it's slowly recover but not yet fully recover, and also at the same time they have higher unemployment for the youth, and also at the same time foreign funds are moving out from China. However, in China, their government are actively implementing fiscal policy to support the market, and also at the same time, they has been reducing their interest rate. I think since last few months, they has been start to reduce their interest rate. This provided some support to the China economy, and the stock market do shown some sign of bottoming, and these few days it shown some sign of recovery. However, it's still uncertain in China because all these economy issues in China are not easy to solve. However, we do see that if let's say going forward, if you see that China stock bottoming, we may need to continue to monitor that whether their consumer sentiment coming back or not. So for now, I would say the recovery is still early. Based on technical chart, they are recovering, but however, based on broad macroeconomy and fundamental wise, they are still in the midst of slow recovery. So we may need to monitor further. And let's take a look on Hong Kong. So Hang Seng Index also we do see some recovery in the stock chart recently as well. Hang Seng Index chart has been reversed the trend recently, forming some bottom as well. However, Hong Kong are closely related to China, so if China economy still on the slow side, still on the slow recovery, I would say we may need to wait for more positive economy news or sentiment from China first before can see a strong recover from China or Hang Seng Index itself. So for now, despite the stock chart recover in China and also Hang Seng, I would say fundamental wise may need to wait for further more positive news or the sentiment, the consumer sentiment we may need to wait for the consumer sentiment to recover before we shown a stronger recovery from either China or Hang Seng Index. However, these two stock indices, other than recent recovery, it also quite prone to all this geopolitical tension and so on. So US election also play a major role to the recovery in China and also Hang Seng Index, because if let's say Donald Trump win the election, it may be more tougher for China and also Hong Kong market as well. So we may need to monitor this, and until the election over, I would say there is still a lot of uncertainty in China and also Hang Seng Index as well. All right, and lastly will be the Bursa KLCI. As we see that over the past few years, also our KLCI was in a sideways or downtrend due to political, I think it's political instability. We have been going through a few prime minister over the past few years, and now finally we do see some political stability under the new regime, and also at the same time, we do see that a lot of data center coming into Malaysia as well. So how many of you heard of this news about data center are coming into Malaysia? You may type me in the chat as well if you heard about the data center news to invest in Malaysia. Yes, there are a lot of data center because of the AI mega trend. There are a lot of companies plan to set up data center in Malaysia, especially the Johor region. This is because Singapore are aiming to become one of the top AI countries as well, and Malaysia actually benefited from it because we have enough utilities. Because to set up a data center, you need big site, you need land, you need water, and also you need power utilities. So all these are benefit for Malaysia, and we do see that certain sector or certain industry in Malaysian stock market has been taking off because of this AI and also data center trend. For example, the utility sectors, and also for example, the construction sectors and so on. So we do see that some catalysts for Malaysia market, and also with the US cutting interest rate, potentially there will be beneficial in terms of macroeconomy wise for the Malaysian market. However, from the stock chart here, over the 10 years, which country still provide the best and consistent return over the past 10 years? You may type in the chat as well. Which country you see that provide the most consistent return over the past 10 years? Despite you can see there's a lot of events over the past, like COVID, like for example, other economy slowdown and so on. Yes, the US market still provide the most consistent and also most predictable return. This is because US has the most global brands out there, and also most high growth US tech companies out there. If, for example, let's say we are talking about AI trend. So if among the AI trends company, I would say US company is still one of the best growth companies in terms of AI trend. Any one of you can list some example in the chat about high growth US stocks in terms of AI and also technology. For example, Nvidia, Microsoft, and also we can see that any other global brands other than these two, you may type in the chat as well about US tech companies that you heard of. Yeah, Meta, we have Apple, and so on. So we have all these mega cap. Despite their mega cap, they are still providing high growth and they have strong fundamental and provide quite predictable returns in long run. So we can see that all these are US companies still beneficial and US stock market still the one that worth for it to invest in because of all these factors. For example, global brands, higher growth, and also predictable earnings and predictable earnings or return. So US market still the one that worth to look out for. However, in short term, if you are from Malaysia, Bursa market is one of the stock market to watch out for as well, other than the US market. All right. So I see question later on. We'll have a Q&A session. I'll get back to the question in the chat. So let's move on to the next topic first. All right. So other than the stock market indices performance, we can see that US stock market is the providing the most predictable returns and also providing the most global brands and also providing the most strong fundamental companies. Other than that, the macro factors will be money on the sidelines. We can see that a record of $6.5 trillion in cash on the sideline parked in the money market funds. So what is a money market funds? Money market funds work like our FD, just like our fixed deposit. When the funds have their cash position, they may store somewhere to earn the interest. And just like our savings, we usually save them in FD to earn the interest rate. For the big funds in the stock market or in the bond market, usually they may park their money into the money market funds to earn the interest rate as well. And part of the reason why all these investors stocking up on cash is to take advantage of the high risk-free rate. So as we know, over the past year, US has been increasing their interest rate. Before the recent rate cut, they has been increasing the interest rate to 5.5%. So investors are parking in the cash in the money market to earn the 5.5% interest rate or the high risk-free rate, to gain the interest rate rather than taking risk in the risk asset or in the stock market. And with the start of the rate cut, some of this cash may rotate to other assets. For example, some of this cash may rotate to the risk asset like stock market, or rotate into other market like Southeast Asia, like Malaysia market, and so on. So we may see that the trend may continue with the rate cut cycle begins. Some of these funds may move their cash into other assets to lock in the higher risk in the bond, for example, a higher rate in the bond, for example, or move into stock market to get better returns in future, because we know that the Fed are cutting interest rate and their target rate will be around another 1% to go. So people may start to move their cash into other investable asset as well. And part of it may move to Southeast Asia market for example, like Malaysia market as well. So this massive 6.5 trillion cash could fuel the next bull run in the stock market. So we may need to monitor when the stock market start to turn, and also if you are invested in other countries, you may see whether the Southeast Asia region, for example, like Malaysia, we know that ringgit has been strengthening recent days, whether the stock market bull run can be continued as well. But I would say this will benefit both US market and also some region of the Asia market. So we may need to monitor this big asset rotation going forward. And with all these high-level updates, stock market indices performance review, and also the money on the sideline, let's take a look on what to focus going forward. All right, so as an investor or as a responsible investor that have a proper risk management, we always take care of the risk first. So let's take a look on what is the potential risk going forward, or what are the potential risks out there going forward over the next month. So first of all, risk will be the inflation trend. So as we know that inflation trend has been a major concern over the past years. People are concerned about the high inflation in the US, in the Europe region. So with the recent Fed press conference, with the recent FOMC, we can see that the US Fed are getting more confidence in terms of the inflation. They do project a lower inflation going forward. So for now, these risks, I would say, are lowered. The inflation trend risks are lowered. And at the same time also, there are some worries about Japan inflation may shot up because of their economic recovery. But based on the recent Japan Central Bank statements, I would say this one temporarily also reduced. The risk also temporarily reduced for the Japan inflation to be spiked up. And Europe region has been also stabilizing. As we know, in the past, they have war in Europe between Russia and Ukraine. And with the inflation slowly coming down, the figures around 2-point-something% in Europe region as well, likely they will be in a rate cut cycle as well, together with the US market. And for China, so how many of you are following China's inflation data? You may type me in the chat as well if you are following China. So for China, we do see that the inflation are slowing down in terms of inflation, but it's on the low side, around 0.5%, if I not remember wrongly. This caused concern in slowdown of the consumer market. Hence, you can see that China economy are slowing down because of slower spending as well, other than the few factors I mentioned earlier, other than the property crisis, other than the foreign fund moving out, and other than the high unemployment. Same time, their consumer spending also are dropping, and it reflected in the inflation figure, a 0.5% inflation shown that their spending are slowing down as well. And China have intent to cut interest rate. And in the past, why they cut it slow? Because they are waiting for the US to cut as well, as they don't want the Chinese yuan to depreciate too fast against the US dollar. And now, with the US are cutting their interest rate, China actually have more room to implement all these rate cut and also other stimulus, and at the same time not to weaken the Chinese yuan further. All right, so this is from China side. So for inflation trend, I would say the risks are lowered based on the recent events. So, but there is still risk for the inflation trend, but it's lower compared to the past. So I would say this one lower risk now, lower risk by now for now. And let's move on to take a look on the next potential risk. So the next one will be slower global growth. As we know, China are in an economic crisis, having a slower recover now, and we do need to monitor the coming months also, early next year and also next year, whether there's any sign of recovery in China. If let's say there are recovery in China early next year or next year, then potentially it will be good for the global stock market as well. So this one need to continue to monitor whether their coming months any improvement in terms of key economy data, and also next year and also mid of next year whether any recovery from China. If there are some recovery in China, potentially this will be beneficial for the global stock market as well, because they are the second largest economy in the world. Next one, Europe and UK, as we know also, they are having lower GDP growth as compared to US. So there are some concern about the global slowdown as well. So this one may continue to monitor. But I would say the China one much more impact, because China are the one of the biggest economy in the world, and Europe has been slowing down over the years. So let's see what Europe Central Bank will implement, or what are the potential positive catalysts in Europe. And next one will be lower earnings forecast. So with all this slowdown globally, there are some concern about lower earnings as well for US companies, because some of the US companies actually rely sales from overseas. For example, some of the companies are having high exposure to China. And if their China sales slow down, then potentially their earnings may slow down as well. Same for the Europe region. Some of the US companies actually have big customers or big exposure in Europe. And if let's say Europe slow down, UK slow down, then this may affect their sales as well. So we may need to monitor these companies, especially those companies with high foreign exposure from US. For example, like US-based company, but they are having a high foreign exposure in foreign market. For example, like high exposure in China or high exposure in Europe and so on. So this is an important parameter to monitor when you are selecting companies. You do want to select a company that have a more balanced revenue rather than only exposed to a certain country. All right, and next one will be the US unemployment trend and also their unemployment concern. So this one, as we know recently, the Fed do project that there will be higher unemployment going forward based on their latest economy projection. However, with the first move of 0.5% cut, this also shown that Fed's commitment to react fast. All right, so this is temporary short-term concern. We may need to monitor the coming months unemployment data, because the coming months unemployment data may move the market big time. This is because Fed do increase the unemployment forecast, and also at the same time, this shown some concern of some economy slowdown in US if let's say unemployment are going up. But with the Fed commitment to cut fast or react fast, then this temporarily stabilize the market. So going forward, we may need to monitor this important indicator as well. And next one is the geopolitical tension. All right, so geopolitical tension, we can see that I think this happened since last few years. For example, US and also China tension, their trade war and also tech war. And also at the same time, we do see that we have a Taiwan issue as well between the China, Taiwan, and also US. At the same time, also we have two wars in the world currently. So we have a Ukraine-Russia war and also some war in the Middle East between Israel and also Hamas. So with all this geopolitical tension, we may need to monitor some of these companies time to time that may affected by this geopolitical tension. For example, avoid some of the stock that have high exposure to China. Why? Because time to time we may see some bans or also tariff implemented on all these companies. So this may cause some volatility for all these companies. And I would say for now, as long as we have a proper risk management and proper portfolio exposure to those companies, then it will be all right. All right. So risk management is the key in this case, because geopolitical tension unlikely to go away in the recent years. So how many of you think that the China-US tension will go away in short term or likely will be a long-term kind of geopolitical tension? You may share your view in the chat as well. If let's say, what is your view? It will be a long-term view, right? So as long as we take care of our risk, have a proper risk management, I would say in the long run, it will be okay, all right? So this will be a long-term problem. So the key solution or the key things to reduce the risk here will be proper risk management. Next one is the US election. So as we know, US election, we have two candidates in this election. We have Kamala Harris and also we have Donald Trump. And both of them likely to be more tougher on China. But Kamala is leading now and likely to have a more mild tariff or more mild policies to China as compared to Donald Trump, which will be a more tough policy to China. So Donald Trump actually created more uncertainty in the stock market because most of his speech or most of his conference are talking about a heavy tariff on China and also at the same time tariff on the rest of the world as well. And this caused uncertainty in the stock market and caused volatility in the stock market. And with Kamala leading, we can see that things are stabilizing, more certainty to the stock market because Kamala likely to have to continue on with what Biden have in the past and likely have a more not as harsh policy towards China as compared to Donald Trump's party. So we need to continue monitor this US election. And no matter which side win, we do expect that they may implement some policies to have more tariff or more sanction to China. But for Kamala Harris, I would say it's better. It's better because likely they will be not as big scale as what Donald Trump planned to do. All right, so this is something we need to monitor further and something we need to follow in the headlines going forward these few weeks or these few months. All right, and the next one will be cyber attack. So cyber attack, yeah, in the past, how many of you heard of the CrowdStrike event, the antivirus system down or the firewall from the CrowdStrike company down and cause a global system issue? Yes, I see some of you answered in the chat. Yeah, so going forward, with everything move towards technology, we have cloud computing, we have AI. So cyber attack will become one of the issues going forward as well. For example, even we have the US-China tension, cyber attack will be one of the main, I would say, main battleground between these two superpowers as well. We may see more and more cyber attack. We may see more and more service disruption and so on. But with that, I think this will be partly good news for the cybersecurity company as well. For those that are doing firewall, they may get more customers. So this we can see as a positive news and also a negative news as well, or a potential opportunity and risk as well for this key point. All right, and so with all these risks, with going through all these risks, now we know that where is the risk coming from. Let's take a look on the opportunities. All right, so after evaluate all the risks out there, we know what to do about all these risks. Let's take a look on the opportunities. So next will be the opportunities ahead in the market. So especially after market stabilize, after election or when things are much more stable. For example, opportunities out there will be in the mega trends. So mega trends usually refer to the technology trend that's going to change the world. So for example, AI, for example, cloud computing, for example, big data. So all these mega trends still a potential opportunity in the stock market. So companies with products or with the services in line with all these mega trends will still an opportunity going forward. For example, AI. So AI, as we know, is a mega trend for the last 2 years. And recently, we do see that some AI stock actually pull back. But certain AI stocks still having a potential growth and potential revenue from this AI trend. So you may continue to monitor after them. And also cloud computing, as we know, with AI growth, there will be more and more cloud computing trend going forward. More data will be stored online and we may need more data center and so on. So cloud computing and big data also another mega trend with the boom in AI. So other than my mega trend, we also can see that consumer upgrade cycle. So with all this AI driven trend, for example, last year we heard about data center, business implementing AI and so on. We do see that the consumer trend will be follow this going forward. Because if let's say you observe in the retail shop now, those selling laptops or smartphone, you can see that more and more smartphone and laptops come with the AI trend or AI function. So going forward, we do see that as the economy recover in US or the consumer sentiment recover in US and also China, we may see more and more AI device demand from this region or also even Southeast Asia region. This is because in order to use the AI services, in order to have a faster AI processing power, consumer may need to upgrade their smartphone, may need to upgrade their laptops in order to use all these AI services provided by all these companies. So we may need to monitor this upgrade cycle trend likely to happen around 2025. In the past, we do foresee that potentially this year, but somehow with the economy still slow, inflation still high, then this has been delayed since 2024. Because why we do forecast or foresee this upgrade cycle is because during 2020, a lot of people upgraded their laptop and also smartphone. And usually, what is the upgrade cycle for consumer devices? Usually, what is the cycle you upgrade your laptop? What is the cycle you upgrade your smartphone? Usually around 3 to 4 years. So with 2020 into picture, so we do foresee that 2023 or 24, potentially there's an upgrade cycle. But it got delayed because of the high inflation and also economy slowdown in the US and also other regions. So with the AI trend coming in and with more and more AI devices for consumer, things may recover in 2025. So do monitor this trend as well and monitor those companies that in line with this as well. For example, those having AI smartphone or those are doing semiconductor and so on. All right, with the timer coming down, let's move on to the next opportunity as well. So other than those companies in line with those industry trend or mega trend, sectors that benefited from the favored presidential candidates also may be an opportunity. For example, that day when Kamala lead in a debate, actually some of the solar stocks rallied. So you may prepare some of these stocks that benefit from different presidential candidate and prepare to see to take any opportunity to trade if let's say you see that some recovery in those stocks. And next one will be the company that has demonstrated resilient to consumer spending, slower consumer spending. For example, those companies that are having strong fundamental, having a low debt and also strong cash flow. And also you want to see that those companies that having low exposure to China. Because as we know in the past, consumer spending has been slowing down and you may need to select those companies that are still shown resilience during this period. During the period where we have a slower consumer spending and these companies still able to generate profits or still able to grow their revenue. So these are the key criteria for those companies. If you're looking for this company, usually will be those less exposure to China because we do see that China consumer spending still slowing down and also company with low debt and also strong cash flow. All right, so this is the company's parameter you can look out for, or their traits you can look out for. And lastly will be companies that are benefited from the recent rate cut. There will be opportunities for them as well. For example, those home builders. Why home builders? So with rate cut, potentially the mortgage rate will be coming down as well. So the mortgage interest rate will be coming down as well, and this will be benefit the home builders. And other than that, small caps. As we know, small caps companies, some of them are rely on loans to survive. And with the rate cut, this will benefit all these small cap company as well, and they may get back their growth as well. If let's say interest rate has been in the down, if let's say interest rate has been in the rate cut cycle. And also next one will be the finance sectors. Finance sectors also likely to benefit from this rate cut. This is because partly it's because consumer spending recover. As we know, they provide a lot of credit services to consumer as well. And other than that, risk of default will be lower with lower interest rate. So this one will be also beneficial for the finance sectors. And other than that, consumer discretionary also likely to recover with the rate cut because people are now easy to take up credit if let's say there will be a lower interest rate. And also at the same time, we do see that usually after a rate cut, likely the retail likely will recover as well. So with retail recovery, people with the lower rate also, with a lower inflation, lower interest rate, people also tend to spend more on discretionary item. So going forward, you may monitor the consumer discretionary sector as well, whether any recovery in all these discretionary item or recovery in the retail sector. And lastly will be the travel related. So travel related stock also may benefit from the low interest rate because when people are in a higher interest rate, people are in a higher inflation, people tend to cut discretionary expenses. And with the rate cut cycle happens, inflation coming down, people may have more budget for travel and so on. So travel related stocks also may benefit from all these rate cut. All right, so I know I overrun the time. It's now counting towards 0. And we know that with the risk and also opportunities compared, we do see that opportunities outweigh the risk here. However, with the stock market at all-time high here, you also need a proper way to approach the market. You may want to only invest in stock with still good valuations and also invest in stock that are still shown some good potential upside. So with that, you need to prepare yourself with the right knowledge and also right risk management because as I mentioned earlier, current market, despite in a bullish run, we still see a potential uncertainty out there and we may need to discipline in terms of portfolio exposure. So in order to learn this up, invest safely, you may need to equip yourself with a proper knowledge and also skill set. So since this is just a 20-minute market update, we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic way. In a systematic way, versatile and also safe way. We have the most systematic course in the market. We have process map for every trading style. and we also have the most versatile strategies to handle all kind of market condition. For example, when the market are having a strong trend, we can do trend trade. When the market going into sideways, we can do swing trade and so on. And when the market are showing good valuation, we can do investing as well. And we also have a safe approach where we will equip you with a proper risk management. Other than that, we also have the right way to screen strong fundamental stocks. Like I mentioned earlier, you need to choose certain stocks to get the opportunities. And after screening, you may stand by this stock in your watch list because the big funds may come in when the valuation is right, and you can use the chart to time to go in together during that time as well with proper money management. You need to plan in some time to practice and pick up the skill set while waiting for the opportunities. Despite market currently at all-time high, there are still opportunities out there. So get yourself ready, and also get yourself ready when the opportunities arise, for example, after the election. Also, we have a hybrid class for the coming intake. We have face-to-face and also online classes. So do join the 3-hour webinar to find out more. The next available webinar will be this coming Saturday, 28 September, 9:30 a.m. You may scan the QR code to register. All right. So if you find this market update is beneficial to you, do recommend it to your friends to join us every month here. So for now, I'll open the floor for Q&A. So any question you may just type in the chat so I can answer any question you would like to ask me about the recent markets. All right, so I see some earlier questions about India. Are they growing? All right, so India market in the past, I would say, has been strong as well. India stock market has been strong as well. But it do show some volatility after recent election in India. So I would say India, personally myself, I don't invest in India. But I would say India market now may be volatile because they are facing competition from Southeast Asia as well. And geopolitical wise also, they are competing with China. And based on what I heard, the supply chain shift there, India actually still could not outperform China for now. And their unemployment in India also still on the high side. So recent months, they may cause some volatility. This is just my personal opinion on that. And I do see that if let's say you were to invest, I would say, personally, I would say still the US market are much more stable. And also compared to Southeast Asia, let's say you're from Malaysia, then Malaysia market are still the one that we are more familiar with. All right, any further questions? Let me just browse the chat. All right, so one question about issues brewing in the Lebanon region, Middle East. So whether any, okay, so we see that issues brewing in Lebanon may trigger greater crisis in Middle East. Yes, we do see that recently, especially the pager and walkie-talkie incident explode in Lebanon, which planned by the Israelis, may cause more tension in Middle East. But you need to monitor whether the stock market react to it, because in the past few rounds with Iran and also with Hamas, looks like stock market already factor in all this tension, and we don't see a spike in oil price yet for now. So possibly market could have already factor in all these factors. So you may need to monitor further any reaction there. So usually when we approach the stock market, other than the news and events, we also see the reaction, whether any key commodities reacted or the indices reacted. So for now, I don't see any reaction from those oil and also stock market indices on this Middle East issue. But we may need to closely monitor this. If let's say the war escalate, then things may change. And also number two, increasing megatrends may hugely increase energy use and water. Yes, you are right. In this chat, shared in the chat. So with all these mega trends, with all this data center, with all this higher computing power, there will be more and more demand for energy. For example, power, because one data center easily consumes a lot of power, and also at the same time we need water as well for the cooling system, and also for the wafer fab as well to produce all these high-end semicon. All right. So if there is not much further questions, then all right, so maybe the last one question is Palantir considered as AI tech company? All right, so Palantir, yes, is considered as an AI tech company, and they have recently added to S&P 500. I believe our staff already answered you in the chat. So yeah, just follow the answer in the chat. So with that, I think if no further questions, then yeah, let's end this session, and thanks for joining us for this market update. And if you find this market update is useful, do recommend it to your friends. All right, so see you all again. Bye bye.